Now, what I'd like to do today for you is share with you one of our most important trading tactics. One of them that's responsible for the biggest gains that some of my traders make. Now, we teach a variety of trading strategies. Some are designed to pull out small but consistent profits. Some strategies are designed to really pull out the mega profits. This one is one of the mega strategies. It's the strategy that if it occurs, you go for it all. I teach my traders that, listen, it's my capital. Some of them are trading it's my capital that you're trading. So I'm going to control you to a certain extent. I'm going to guide you. I'm going to make sure you constantly get the proper training and development you need. However, I do want you at times to risk everything, to take the entire account that you have. If you have $300,000, there are times I want you to take the whole $300,000 and put it on the line in one single trade. And a lot of traders are sort of tentative to do that until they start to understand when I want them to do it. What I'm about to reveal to you is one of the moments my traders must put every dime they have in their account on the line. Whenever this event happens, I don't want caution. I want everything in. And I'm going to reveal this to you. And this event happens a lot more frequently than you think, but it's a risk it all event. Now, before I delve into that event, I have to do what I typically do, which is start you off with the basics, right? I teach every trader that there are 13 individual bars that make up market play. The market only has 13 letters to tell its story. All right, the English language has 27. Is it 27 or 26? 26, sorry. All right. My English have 27. You only have 26. All right, 26 letters in the English language. There's only 13 letters in the market's language. These 13 bars are just repeated over and over and over again. And those 13 bars create uptrends, downtrends, sideways trends. Everything out there is made up of 13 bars. That's it. Now, what I do with every trader is sit down and I teach them which are the 13 bars. I teach them how to identify them. But more importantly than that, there's something interesting about these 13 bars. Each one of the 13 bars has a statistical tendency to produce next one of the other 13 bars. So bar number 2 has an 87% chance of producing bar number 9 next. So if you can identify, this is bar number 2, I've got an 87% chance that bar number 9 is next, and bar number 9 is a big giant red bar to the downside. And then bar number 9 is almost always followed by bar number 6. So these statistical tendencies are very important and are key to trading consistency throughout all types of markets environments. But then I take it a step further. After I teach them that, I say, but now that you know all 13 bars, these are the only 3 that you really need to focus on. The other 10 are fine, but these 3 bars are the power bars. And they fall into 2 categories. There are elephants, and then there are tails. 2 categories. The elephant bars are simply elongated, fat, wide range, almost entirely solid bars. They are taller and longer and fuller than most of the bars that you see to the left of it for months. So it's the first, biggest, tallest, fattest, my 5-year-olds say the greeniest, when it's the bull, bar in a long while. The first of its kind in a long while. Now what's interesting about the elephant bars is that you and I can't create them. In order to have a bull elephant bar form in an IBM or a McDonald's or a Microsoft or an Apple, it takes billions upon billions of dollars on one side of the equation, the buy side, to produce it. You and I can't produce it. We could take all of our capital, pull it together, and we couldn't put a dent in these things. So what does a bull elephant bar tell you? It tells you that the institutions, not the individuals, but the institutions that are active in that stock have for one day or one period right now decided to agree to all buy at the same time. That's the only way you can get a bull elephant bar. The sellers have cleared out. The buyers are all acting in concert together, and they're not just you buying and me buying, but these are institutions with billions of dollars behind them. It's the only way you can get a bull elephant bar. And so think about this. I want you to understand this, and I teach my children this way. I want you to imagine a bathtub that is filled halfway, filled halfway with water. And there's an elephant that's actually contemplating, wants to step into the bathtub, but the elephant wants to do it quietly, and the elephant doesn't want the water level to rise. Now, can an elephant step into a bathtub without raising the level of the water? No. But he can do it very, very softly and quietly, 1 foot at a time. So 1 foot goes down, the water level rocks, that's a bull elephant bar. Boom, bull elephant bar. But then they stop. You rarely see a bull elephant bar, bull elephant bar, bull elephant bar, bull elephant bar. No, you see one bull elephant bar, boom, and then the elephant says, let's wait for the water level to settle down a bit. And then when the water level really quiets down and everyone forgot that there was a big splash, then a second foot comes in. Boom, maybe another bull elephant bar. But several weeks down the line, another powerful green bar develops. Water level rocks, settles, right? And then boom, another one. Maybe the next type of bar is a bottoming tail bar, which is in a sense a former bear elephant bar that has actually lost its red. 10% of its red. 50% of its red, all of its red, gone green. This bar is nothing more than a former bear elephant bar that has completely had a 180-degree turn. The beautiful thing about bottoming tail bars, the thing about bottoming tail bars is that it doesn't matter what color is on top of the tail. It's the tail portion that represents the bull portion. So if the tail is at the bottom of green or at the bottom of red or at the bottom of no color, it represents buy power. Buy power. Bull elephant bar, buy power. Buy power, buy power. Bear elephant bar, sell power. Institutions are leaving the play when you see the formation of these bars. Topping tails. These were former bull elephant bars that actually went negative. 10% of the green's gone. 50% of the green's gone. All of the green's gone. We go red. This 180-degree reversal is one of the most powerful moves in the market. And there's about a 92% chance of follow-through to the downside on these bars. All you got to do is know those statistics. Now, so we've got the 3 elephant bars. My traders are taught whenever any one of these 3 bars shows up, you better take my money and put it into the bar, right? At least a portion of it. So when a bull elephant bar forms, they're taught to buy into the bull elephant bar before the bull elephant bar finishes. So if it's a 5-minute chart, they're buying into it 4 minutes and 45 seconds into the bar, right before the 5-minute ends. If it's a daily bar, they're taught to buy into that bull elephant bar before the day finishes, maybe 15 minutes before the close. Do you follow this? So these bars are bought into. You don't wait till them close and then buy the next bar. We buy these bars. These bars can only be created by a plethora of institutions. Think of a seesaw. Half were on one side, half were on this side, buy side, sell side, and equilibrium. But if all the ones on the sell side get off the seesaw and go over to this side goes down, and that side goes up. This is the only way. Everyone went to the buy side on this bar. Everyone went to the buy side on this bar. Everyone went to the buy side on this bar. So why shouldn't you and I go to the buy side? It's as simple as that. You think this game is complex because you're looking at numbers, PE ratios and sales ratios and earnings reports and cash flow statements and all of this nonsense. You know what it really is about? It's about following the flow of money. Who's going to get the stock up? You? No. Your neighbors? Probably not. Your relatives? Not mine. All right? Big institutions. If you buy a stock at 20, the only thing that's going to get it up is big institutions buying after you. It's as simple as that. Why they buy, who cares? Who really cares? Just, we want them to buy after us. This is a show that they are going to be buying for a while. They just don't put one foot in the tub. All right? They put 1 foot, second foot, third foot, fourth foot, and when the elephant is totally in the tub, then he sits down. When he sits down, it's over, because the only move left then is to stand up, water level goes down, 1 foot out, water level goes down more, another foot out, water level goes down more, and then the process reverses itself. But the first bull elephant bar of its kind in a while is the first foot. Does this make sense? The first bottoming tail bar in a long while is the first elephant footprint. All right? Now, we also do this on the short side. All right? My traders are told if they short a stock or what have you, they're shorting into a bear elephant bar before the bar finishes, and they're placing a protective stop above the high. They're shorting into a topping tail bar before it finishes, and they're putting a stop above the high, and so forth and so on. Now, here's the strategy. Now that you know the 3 power bars, which fall into 2 categories, elephants and tails, I'm going to share with you a strategy that I told you is our go all in event.